All right, let's talk about something that gets every investor's heart racing, the idea of a multi-bagger. What if a small cap company could actually multiply your investment 4 or even 5 times in just a few years? Well, that is the huge claim we're digging into today. It's all about an Indian defense tech firm called Zen Technologies. So we're going to break down exactly how this analysis gets to such a wild prediction.
Okay, before we jump into the exciting stuff, we have to get this out of the way. Everything we're about to discuss is based on the source analysis, and it's for your education only. This is definitely not financial advice. You've got to do your own homework or talk to a pro before making any decisions. Right, with that covered, let's get into the good stuff.
First up, Section 1, the big claim. We're not going to waste any time. Let's get right to the headline number that started this whole conversation.
So you have to ask yourself, is this even realistic? Can a small company, especially in a super specialized field like defense technology, really deliver those kinds of massive returns so fast? I mean, that's a seriously high bar. But according to the analysis we're looking at, the answer is a very confident yes.
And there it is, the core of the claim, a projected 4 to 5 times growth by the year 2030. For anyone who follows the market, you know what that's called, a potential multibagger. It's a stock that could multiply its value again and again. That's a huge, huge claim for any company. So let's see how they even begin to back this up.
So, Section 2 is all about the company itself. To even begin to understand a 5x projection, you first have to know what's under the hood. What does Zen Technologies actually do? And is its foundation really strong enough to support that kind of explosive growth?
Zen Technologies basically lives in two very critical, super high-tech spaces. First, you've got advanced defense simulation. Think of them as creating incredibly sophisticated video games to train soldiers for real-world combat. And second, they build state-of-the-art anti-drone systems. And just look at their client list. It's top tier, mostly the Indian Army and the Ministry of Defense.
Whoa, okay. These financials tell a pretty amazing story. Just look at the projected leap in revenue. We're talking about going from 219 crores in 2023 to nearly 1,000 crores by 2025. But here's what's even crazier to me. This explosive growth is happening while the company is pretty much debt-free. You know, that combination of super high growth and almost no debt, that's incredibly powerful. And this chart just puts that revenue story into perfect focus. I mean, look at that steep climb. From 219 crores to nearly 1,000 in just a couple of years. That isn't just growth, that's an absolute explosion. This right here, this is the financial engine that the whole multi-bagger argument is built on.
Okay, Section 3, Sector Tailwinds. Now, a strong company is great, but the source here argues that Zen isn't just growing on its own. It's like a sailboat being pushed forward by these powerful currents in the entire defense industry. And investors have a name for that. They call them tailwinds.
You've got 4 key forces all pushing in the same direction here. First, the Indian government is going all in on domestic production with its Make in India push, and they're backing it up with massive orders. The entire defense sector is expected to grow over 20% a year. And, well, unfortunately, rising global tensions mean there's more demand than ever for the exact kind of training and anti-drone tech that Zen specializes in.
All right, on to Section 4, the math. So we've got a strong company and a sector with the wind at its back. But how do you actually turn that into a specific stock price target? Let's walk through the calculation.
This is really the million-dollar question, isn't it? How do you get from a good story to a hard number? Well, the analysis uses a pretty common valuation method that's all about projecting a company's future earnings.
Let's break this down nice and slow. Step 1, they start with the current earnings per share, or EPS. That's just the company's profit divided by its shares, and it's around 30 rupees right now. Step 2, they assume, and this is a big assumption, that profits will grow at 35% every year for 5 years. Step 3, if that happens, the EPS in 2030 would be 134 rupees. Step 4, they apply what's called a price-to-earnings, or PE, multiple of 40. You can think of this as how much the market is willing to pay for each rupee of profit. 40 is high for sure, but it's not crazy for a fast-growing tech company. And finally, step 5, you just multiply that future earning of 134 by the multiple of 40, and bam, that's how you landed a target price over 5,300 rupees.
So, to put it really simply, the whole calculation hangs on this one core belief. Over the long haul, a company's stock price tends to follow its profit growth. The analysis is basically betting that if Zen's profits can actually grow at 35% a year, its stock price is eventually going to follow suit.
So, This is how the analysis gets to that 4 to 5x range. You have the base case, which assumes that 35% growth rate, and that gets you to about a 4x return. Then you've got the more optimistic case, which just bumps that growth up to 40% and uses a slightly higher PE multiple. That's what pushes the potential return to 5x. At the end of the day, it all comes down to how much you believe in that future growth.
Okay, Section 5, risks. It can't all be good news, right? Of course not. No investment is a sure thing. And to its credit, the analysis is very upfront about some pretty big risks that could stop Zen from ever hitting these ambitious targets.
And listen, these risks are pretty significant. Relying on government contracts means your revenue can be unpredictable. It's not a steady stream. The fact that the founder's own stake in the company has gone down, well, that can be a red flag for some investors. These defense projects are also super complex and notorious for delays. Plus, they're up against some tough competition. But maybe the biggest one is that last point. The stock has already shot up 10 times from its 2023 lows. That means a lot of this good news might already be baked into the price.
And that brings us to our final section, the verdict. So, after weighing all the good stuff and the bad stuff, what is the final takeaway from this analysis?
This table really just brings it all together, doesn't it? The analysis gives high marks pretty much across the board. A quality business with valuable technology, strong debt-free financials, and those powerful industry tailwinds. So the conclusion is pretty clear. The author believes Zen is a high-confidence candidate to deliver those 4 to 5x returns. And the analysis leaves us with one last, very provocative question to chew on. Could Zen Technologies be on its way to becoming the private sector's version of a government-owned giant like Bharat Electronics Limited or BEL? Now that is a powerful thought, and it really frames the massive scale of the opportunity they're talking about. It's going to be fascinating to see if they can actually pull it off.